Person who downloaded Moomoo in Malaysia started stacking their phones. Here we go! It looks like it outtowers our tallest tower, surpassing our highest peak. We've crossed 2 million downloads, and every download pushes us to reach for the stars. To bring you only the smartest trading experience, with global market access. Moomoo, download now.
Moomoo Desktop, the next-gen trading platform, launches with a focus on simplicity, allowing traders to concentrate on trading. The platform lets users customize their workspace with real-time data and interactive charts, while advanced charting tools enhance technical analysis by allowing trend lines and key levels to be marked for more precise decisions. With the Options Analysis tool and Strategy Builder, traders can visualize outcomes through profit and loss simulations. Users can perform complex tasks with ease. Moomoo Desktop, the next-gen workspace to help unlock your trading potential.
Still guessing stocks online? That's cute! Moomoo AI gives real answers. You don't scroll, you ask. Like Tesla performance, researching used to take days. Now, it takes seconds. More to ask? Like. Good time to buy, company's profile, next earnings report? Covered in seconds. And yes, trade with zero commission. Moomoo, smart investing made simple.
Who says I have a trader boyfriend?
He's so good at his job, projecting market trends.
Wow, he's a dentist.
But he finds undervalued stocks in seconds, just like a trader.
He's not a trader.
Estimate EPS is around 16 cents. That's a significant decrease from the previous quarter.
Bring out the pro trader in you with Moomoo AI. Financial questions analyzed in seconds for smarter investing decisions. With smarter tools comes smarter trading. Moomoo.
In a fast-paced world of trading, Moomoo can help me stay on top of the market. With key market data and insights, trading is now easier. I can use intuitive charting tools to identify trends and patterns, navigating the market with ease. And the smart analyses can quickly unveil strategies matched to my risk-reward profile. From potential profit and loss to probability of success, I can compare and choose which best suits me. What's more, I can save more on my trades with much lower fees. Take charge of your trading just like I do by downloading Moomoo today.
Imagine if every person who downloaded Moomoo in Malaysia started stacking their phones. Here we go! It looks like it outtowers our tallest tower, surpassing our highest peak. We've crossed 2 million downloads, and every download pushes us to reach for the stars. To bring you only the smartest trading experience, with global market access. Moomoo, download now.
US stocks at record highs. Worried about a pullback? Try a covered call strategy with US options. Let's take a look at how this works. Start by holding 100 shares of NVIDIA stock. Then sell one call option to earn extra premium. If NVIDIA's price stays below the strike price, you keep both shares and the premium. If it goes above, you keep the premium, but your potential gains are capped. Generate extra income while holding stocks. Enjoy zero commission trading on US options. Download Moomoo now. Smart investing made simple.
Lost in options jargon? Let's clear that up. With Moomoo, options are made simple. Turn your foresight into smart strategies instantly. Visualize gains and risks. Stay in control. Trade at zero commission. Download Moomoo now.
Get all the investment insights you need in the time it takes to skip this ad. Get debriefed by AI on stocks daily and weekly. Evaluate stock trends based on historical data. Assess market mood with clear bullish and bearish signal analytics. And easily monitor your favorite stocks based on key events. Moomoo AI, making smart investing effortless. Download Moomoo now, the #1 trading app in Malaysia.
Imagine if every person who downloaded Moomoo in Malaysia started stacking their phones. Here we go! It looks like it outtowers our tallest tower, surpassing our highest peak. We've crossed 2 million downloads, and every download pushes us to reach for the stars. to bring you only the smartest trading experience with global market access. Moomoo, download now.
Good evening, everyone. Welcome joining in our live stream. So tonight is our Moomoo Malaysia 2 million download campaign. So to celebrate this, we will be providing a lucky draw, and of course later I will be sharing a market outlook for our users. And later on, we also are very honored to have our distinguished guest from Bursa Malaysia to have a fireside chat to talk a bit about Malaysia IPOs. Of course, the My Value Up program that we recently launched. Besides that, when you're watching this live, don't forget to join our 2 million download special community topic. This live stream topic, kindly share your thoughts, and of course, you have the chance to win stock cash vouchers. So please share your thoughts and post it in our community page following that topic, and then you stand a chance to win some of the stock cash coupons as well. So before we begin, please take note that this information shared during this presentation is mainly for educational purpose and should not be considered as investment advice. So let's start with our market outlook.
Imagine if every person who downloaded Moomoo in Malaysia started stacking their phones. Here we go! It looks like it outtowers our tallest tower, surpassing our highest peak. We've crossed 2 million downloads, and every download pushes us to reach for the stars.
All right, let's move on to our market outlook section. I think why we still think that there's a re-rating case for Malaysia. So without further ado, let's move into our market outlook view. All right, first slide. So this is the agenda that we'll be covering today. So 6 months from the shock, since we have been through the war in US and Iran. So 6 months from now, let's see how Malaysia is positioned. And secondly, I think why Malaysia has been a very strong domestic shield, and what are the key anchors and factors that still make Malaysia market holding up at this level. Lastly, also we always talk about the valuation gap, why Malaysian always trade below the peers. Here also there's some initiative by Bursa Malaysia to address why there's a closing of the valuation gap is very crucial at this moment. All right, first off, I think we will start off by explaining how Malaysia market has been performing in the first half basis. So you can see a zigzag, right? Here you can see Malaysia market at one point since February period, before February period, we have seen Malaysia market performing quite strongly, even hit a year-to-date high of 1,070 level. That was partly driven by very strong foreign buying. Even though I think we saw a very strong performance in 2025, a lot of people are asking, hey, are we short of new catalysts in the market? But given the so-called very strong buoyancy in US markets as a whole, I think that drive up Malaysia's own market performance, as well as Jan and February period saw a new high. But as I mentioned earlier, when the war started in 28th of February, there's the volatility started to happen. So from March to May period, because of the surge in the oil price, that led to the sell-off in the global tech segment, which is why Malaysian market also can't escape, which is why we saw the correction from 1,007 high back to the below 1,700 level. That was the second phase. Then from June to August period, when there's a ceasefire talk, so happened Malaysia-wise, there are also some political noise in Malaysia, as we have seen so-called the state elections dissolution, which triggered the fear that how stability in the Malaysia political market. But when ceasefire talk happened, that of course comfort the foreign investor interest as a whole, which is why even though the state election outcome, we saw landslide victory by BN and PN pack, that doesn't really impact much, which is why overall June to August period has been seeing a very strong run in the market. And of course, looking ahead, I think the key event to be watched out is of course on the Malaysia budget itself. On the 9th of October, there will be our Malaysian budget. So given that landslide victory by the BN and PN camp, so I believe current government will be try to be more riot friendly in terms of the budget, and try to be more fiscal expansion as well, might see more budget being allocated to the construction side. All right, that's explain how the three phases of KLCI performance in the first half. Next, that's why I'm saying domestic versus external. Externally, we see a lot of drag. US and Iran conflict still be ongoing, and global energy price also continue to spike and being volatile. And because of the closure of Hormuz Strait, we're also seeing that the global supply chain being impacted as well. There are certain shipping routes and also some of the trade balances being affected because of that. Back home wise, it's a very different scene. So Malaysia is very fortunate. We are the net energy exporter, which is why always when oil price and gas price spike up, Malaysia naturally benefited from it. So we see actually our export-wise, LNG up by 83%, petroleum export also up by 56%, given the spike in the oil price. And of course, Malaysia-wise, we have this targeted subsidy and the CPI cushion, and we also able to hold up our CPI better than original peers. So the recent CPI numbers came in actually quite in line with the expectation at 1.8 to 1.9% level, which is very healthy as compared to the regional. And last but not least, I think thanks to the AI expansion in the capacities and also on the demand on AI inferencing models, that led to the strong AI server demand. So in the June, E&E export-wise up by 57%. And same goes to our capital imports, which means that more hyperscalers are investing into new data centers here in Malaysia. We also need more equipments to be installed here in Malaysia. That's why import-wise also jumped by 67%. So overall, you can see a very healthy, very dynamic Malaysian market performance. Next slide to explain a bit of why Hormuz closure is so important to the global trades, because Hormuz Straits almost command about 20% of the global seaborne crude and LNG supply. So when Iran started to dictate on this sea route, like blocking some of the shipments, the export of the LNG actually get affected, which is why that triggered the crude oil price to be up and down during this period. So when there's a increased tension between US and Iran, which means they are fighting with each other's, Iran side tightening on the Hormuz Straits passage, oil price started to jump. And where the ceasefire talk, Iran side also shows some courtesy that they're willing to let go some of the friendly parties to pass through. We can see the oil price coming off. But this, of course, have increased the overall risk premium, which is why insurance premium also gone up, sea freight also gone up to particularly to cover some of these high expenses. And eventually, all these incremental costs will be passing through to the consumers, which is where CPI numbers are gradually being affected by that. All right, next one, we look on the heat map of the global inflation. So you can see the more orangey one is reflecting the inflation rate that's above the average trend. The greener one is telling that inflation rate is still keeping quite well below the average trend. So you can see Malaysia, we are quite well insulated as compared to the regional peers because they're heavily relying on the imports of the crude oil. Malaysia-wise, we still, as I mentioned earlier, we have the so-called the uniqueness, the advantage of able to make use of the petroleum revenue to give back on the subsidies to our people so that our crude oil price, pump price won't go up as steep as the others. So Malaysian-wise, you can see compared to regional peers, we are just delivering 1.8% in the July CPI numbers, and compared to Thailand, Indonesia, and Korea, which is all in the orangey zone, which is higher than the average trend. All right. Next one, just to summarize back why Malaysia a bit stand a bit apart from the rest of the region. First off, I think 6% GDP growth. This is something quite spectacular, and also beat the expectation of a lot of economies that have predicted Malaysia GDP growth in 2026. At first, the flash numbers were showing 5.8%. Even myself, when I talked to some economists, that has been a better number, better than expected numbers, but end up it was 6%. So 6% also telling the whole region that Malaysia very much insulated by the external noise, and thanks to the E&E exports and also the domestic demand that continue to support the economy. which is why that outpaced the overall GDP growth of 5.4%, 5.4% in the Q1 itself. But Bank Negara continue to maintain their prudent guidance. So I think in the press conference, Bank Negara also mentioned that the reason why they still maintain 4 to 5% GDP growth, I think partly also due to the uncertainties surrounding the Malaysia market, outside Malaysia market, where we have a war happening. There could be further so-called strain in the Hormuz Straits closure. So these are the reasons why Malaysia-wise still holding the GDP numbers at 4 to 5% at this juncture. And next, of course, on the OPR-wise, I think could be held steady until the end of the year, probably until the first half of 2027 as well, given that inflation not a big concern, and growth rate-wise also exceeded expectations. So OPR being held steady means that there won't be any interest rate risk to holding into the Malaysian stocks. Next, also a lot of FDI is still coming in, still flowing very strongly into Malaysia data centers space, especially the AI data centers, where we have been seeing 144 billion since 2021 until June 2026. Hyperscalers like Microsoft, Google, AWS, Oracle, and NVIDIA are all scaling up their operation in Malaysia. So this could be a very strong anchor to Malaysia domestic growth. And as mentioned earlier, core inflation also maintained very at a well-kept level. 1.8 to 2%, 2.3% is a very manageable kind of inflation rate for Malaysian central banks to look at, which is why these four factors really putting Malaysia standing apart from the regional peers. Next, and this now is more on the macro side, then on the more specific sectors-wise, which are the key sectors that we are looking at in the second half of the year. First off, domestic anchor-wise, I think a part of the inflation noise, I think another key risk that still so-called buggering a lot of investors actually is the tariff. I think beginning of the year, tariff also one of the big topic we talked about when Trump imposed tariff to the regional countries. And one thing to be more take comfort with for Malaysian-wise, actually Malaysian listed corporates, 65% of our revenue is actually generated locally. So despite US imposed tariff on us, the impact-wise will be much lesser as compared to like countries like Korea and Taiwan. You can see the exposure-wise to US is more than 40 to 50%, given that their main export is semiconductors and also some of the automobiles to US market. Malaysian-wise, we are much more domestic-driven, plus the trade between Asian countries, which is why tariff-wise won't hit us as hard as compared to the other region. All right, next, AI. I think AI is something that a lot of investors has been monitoring. So hyperscalers investment into these data centers, also one of the key indicators to understand how much further they can further invest into AI. So this is based on the latest Q2 numbers. This is an aggregation of all four major hyperscalers capex guidance. So we can see from 2026 until 2028, the capex will still be continue to grow. Cash flow wise, I think when there's a selling down in the hyperscalers names in US, I think a lot of people were concerned on the free cash flow position. Free cash flow mainly stands for operating cash flow minus off your capital expenditure. Of course, given the outlook or the future potential on all this AI and to maintain the relevancy of their business, hyperscalers willing to spend or invest right now so that they can continue to capture the market share in the future. So despite heavy capex spending, they can still manage free cash flow positive as compared to the total sales number. So this is up until 2028 figure based on current estimation of 7.4%. All right. Next, AI data center boom, as mentioned earlier, 144 billion that flowing in, that will so-called double out, more than double out Malaysian capacity in the data centers capacity. So sectors that will be outperforming. First off, of course, is power grid. Not to mention, I think you guys know the name because I can't name it out the company name. So this power grid is definitely one of the big beneficiary, given that the electricity demand will be sparking up given the more hyperscalers coming in. As you all know, data centers consume a lot of power. And of course, not just the power consumption, water is also another key part, as we utilize a lot of water to cool down the operation of the data centers, which is why water infrastructures, there are a couple of listed water operator names in Malaysia, and the one especially in Johor, will be seeing direct beneficiary as well. Then to construct all these data centers, as you need all these local players to coming in to build the shell of the data centers, and these jobs is actually fastened around. So names like, sorry, I can't name the names. You guys can figure it out. Whoever keep on winning the contracts, they have been seeing a lot of all these big contracts from these US hyperscalers, and including some of the Chinese players as well. This fast turnaround contract, and of course their profit margin wise also better than the federal jobs, which is why that built a very strong order books able to support their earnings growth in the coming years. And a part of the shell of the data center itself, actually inside data centers, about 40% of the total construction outlays actually goes to the electrical system and also the substation works. So in Malaysia, especially some newly listed names, they have been needing more financing to take up all these bigger jobs, which is why DC Power Enablers also has been performing very well and continue to see new contract wins in the recent period. All right, that's on the data center part. Next, last but not least, just now I mentioned IPOs, right? So newly listed name, Malaysia has been one of the best performing IPO market as compared to the regional peers. Of course, this year the hottest market is still Hong Kong. Hong Kong raised about $26.8 billion on the year-to-date basis. That's about 87 IPOs. Some of the large language models IPO has been very successful. But Malaysia-wise, compared to the other Southeast Asian countries like Singapore, like Indonesia and Thailand, we also outbeaten them. So you can see Singapore-wise only got 5 IPOs in so far in 2026, and our peers in Indonesia and Thailand only got 1 IPO each. Then amount raised, Malaysia also outbeat Singapore as well. We raised about $1.3 billion US. That's how Malaysia IPO has been performing well. I believe some of you guys has been participated in our Malaysia IPO, probably through our platform as well. So you can see just some scorecard or some summary of what have been driving the IPO outperformance. So here you can see, just to recap back, those who are heavy in AI, or they are so-called the tech alpha, are the names that has been performing very well. I think we have Skychip. I think everyone knows Skychip, and Stratus, probably lesser known by the market, but the IPO also performed very well in the July month. So we can see both of them up about 275% since the IPO. And of course, ACE market also very active. We see 29 out of 35 listing basically are the ACE market names, and some of them really perform very well since the IPO. So we can see Kimin Group up by 400%, MBES up by 244%. These are the very performing ACE market IPO as well. And Anchor Mega listing, I think Sunway Healthcare, I think it provided a very strong start for the Malaysia IPO performance. I think Sunway, despite just up by 36% gain since the IPO price, I think, but overall that gives a very strong start, the confidence of Malaysian to participate in the IPO. So here also I got the table on the right hand side, the bottom right. You can see here actually Malaysian wise overall, if the oversubscription numbers is higher, then the day one performance of this IPO is actually better. So watch out when you subscribe IPO, how to find those that potentially have high subscription rate. And of course, when buying, also have to assess the company well. So in Moomoo Malaysia, we do provide this kind of evaluation or some of this content to guide you which are the IPO that easier for you to participate in. And of course, the higher subscription rate doesn't always mean it's better, but these are the trend that has been showcased so far during this year. All right. Next one, I think on the valuation gap, I think this is a big question that a lot of investors has been asking. Even myself, when talk to some of the fund managers out there, why Malaysia always trade at the discount when comparing to peers. So here is a chart. You can see Malaysia-wise right now, we are actually trading around 14 times PE, this on the forward basis, as compared to our regional peers like Singapore, like Thailand. Singapore-wise trade about 18 times, Thailand trade about 17.7 times. But when comparing to the earnings growth, you can see on the bottom of the chart, actually Malaysia-wise, on the 2026 financial year, we actually outperformed them as well. We are able to achieve, forecasted to achieve 2026 earnings per share growth of 10.5%, while Thailand only seeing a meager growth of 1.3%, while Singapore only 8.1%. So there must be a problem that why foreigners not willing to coming in at the full-fledged basis, because as all know, foreign shareholdings in Malaysian market still hovering at a very low, historical low level, about 19%. So these are the reason, one of the angle why I think Bursa Malaysia came out with this My Value Up program. Just to give you guys a very quick intro about the My Value Up program, actually the purpose is to close the valuation gap, where a lot of Malaysian listed companies actually are relatively undervalued against our regional similar peers. So that's why there's something being lagging. PE-wise, Malaysia used to trade about average at 18 times 10 years ago. That was 10 years ago. But now we only trade about 16 times, then average about 16 times, as I mentioned earlier, now is even lower at 14 times. So that's a huge, big gap of compression in terms of the PE. And of course, also top 500, our listed company, 46.4% of them actually had an ROE that below 8% for the 10 years period. So this is why something that need to be worked on. Of course, the ultimate aim of Bursa-wise is set a vision that from 2025 to 2030, we hope to increase the whole capital market size from 4.3 trillion to 5.8 to 6.3 trillion. So this figure actually combine equity valuation and the debt market valuation as well. So if that can be achieved, then that is a very great rating factors to Malaysian company as a whole. So that's why I think some of the critical things that need to be done is actually on the so-called not just sharing on the historical numbers, but more on the long-term vision and strategy that able to attract more attention of the foreign investors, institutional investors, and retail investors as well, to put in their faith and put in their investment to buy into the long-term strategic growth of Malaysians, so that this valuation gap can be narrowed down. All right. Next one, last but not least, I think not just talking about the opportunities, we have to mention on the key risks to be monitored as well in Malaysian market. Of course, macro-wise, I think these are the still big thing that are hanging on us. If there's a ceasefire collapse, oil price could respike, which means crude oil price goes up, rate might have to go up as well to control on the inflation, and that may hamper on the consumption ability of the Malaysian market and the regional market as well. The overall trade will be going down. So these are the potential risks. And of course, not to forget the tariff escalation on the E&E side. I think recently in the month of July as well, Donald Trump also announced 10% tariff on those heavy labor-intensive sectors as well. So Malaysia, I think we're also doing our own study to argue our case that despite usage of high labor-intensive, but there's a lot of so-called measures to mitigate that. And thirdly, China growth. I think China growth is also one of the big factors that a lot of investors putting on, given that GDP numbers wasn't as strong as previously. But one thing to take comfort is actually China is transitioning from manufacturing base of economy to more servicing base of economy, which is why you can see pure GDP alone doesn't capture the growth in the service sector, which is why when looking at the headline numbers, people always say Chinese growth is relatively disappointed. Fed-wise, I think overall, Fed-wise, we are still seeing rate at the lower level, despite oil. Fed-wise, despite staying higher for longer, which is why I think despite we saw July's PI numbers slightly softened against the expectation, but the coming so-called the Fed minutes will also be very crucial to find out the clue that whether Fed might raise the rates by end of this year or not. So these are the few things you have to watch out. And of course, back to Malaysia alone, the heightened chances of having a general election GE16 by end of this year, I think that's another risk to be watched out, given that if any change in the current administration, that might result change in the existing policy, tax, subsidies that have been given out that I mentioned earlier. Of course, the trade alignment as well, these are something that might so-called cause the company to delay their capex or delay the FDI to come in. So these are the few key risks that we got to monitor for Malaysian market at the second half of the year. All right, that sums up my presentation for today. And of course, very important as well, disclaimer. So whatever I've mentioned here, I've shared here, it's more for the educational purpose and it's not investment advice. So please do your own study and research before making your own investment decisions. Yeah, this all sums up my presentation. So now comes to the more exciting segment. Our lucky draw session now starts. Let's begin the draw. So this round, I think because to celebrate our 2 million downloads, we're actually giving out total prize of 200 winners. Then of course, for this SpaceX winners, we only limited to 197 because we leave another 3 winners for a grand prize session at a later stage. So please stay on to this live to see whether you can win our grand prize after this live stream. All right, congrats to our winners. So our official winner list will be announced in our Moomoo community. So free shares will be reflected in your Moomoo account within the 7 working days. So please stay tuned on it. Thank you. Congrats to all the winners.
Imagine if every person who downloaded Moomoo in Malaysia started stacking their phones. Here we go! It looks like it outtowers our tallest tower, surpassing our highest peak. We've crossed 2 million downloads, and every download pushes us to reach for the stars. To bring you only the smartest trading experience, with global market access. Moomoo, download now.
Okay, thank you very much. Thank you for staying on. Yeah. As we just covered our 2026 Malaysia Market Outlook presentation, our domestic capital market-wise is standing at a very compelling structural inflection point. So from solid macroeconomics fundamentals and a very resilient retail participation, Bursa Malaysia is firmly cementing its position as one of the Southeast Asian leading destinations for new listing. However, as highlighted in the presentation earlier, a thriving market cap target towards 6.3 trillion require more than just bringing companies to the exchange. So it actually requires unlocking long-term corporate value and of course deepening the trust and of course building an ecosystem where every market participants play an active role. So to dive in deeper how Bursa Malaysia is steering this growth, we also want to explore the roadmap behind this newly introduced My Value Up program. We are very privileged to host a very special Fireside Chat today. Please welcome Ms. Stephanie Tan Kamun, Director of Group Commercial and Market Coverage at Bursa Malaysia Berhad. Ms. Stephanie, really our privilege to have you, and thank you so much for your time to join us. We truly appreciate your presence and leadership in guiding Malaysian primary market expansion. Ms. Stephanie, during my presentation earlier, we actually looked at how retail and institutional capital have actively responded to our recent IPOs. So before kick off our chat, probably a quick greet to our audience.
Yes,
and
sure. Thank you, Jin Chang, for having me here today, and thank you to Moomoo as well. Good evening, everyone. It's a pleasure to be here, and I'm looking forward to this Fireside Chat, Jin Chang.
Thank you. Thanks, Stephanie. So my first question, actually, as presented earlier in my presentation slide, we actually seen Malaysia has outbeaten our regional peers, even Singapore, Thailand, and Indonesia, in terms of number of listing, and of course the funds raised in the first half of the year. So from Bursa perspective, what are the core structural drivers behind this sustained momentum, and how the profile of the companies coming to the market has actually evolved from a 12 to 18 months period?
I think there are 3 things behind Malaysia's IPO momentum. First, confidence. Second, pipeline. And third, ecosystem. First, I think there is confidence from both issuers and investors. Malaysia completed 60 IPOs in 2025, the highest annual number since 2005, raising close to 6 billion ringgit with a total market cap of 27.4 billion ringgit, and remain ASEAN's leading market by listing numbers. If you look at our year-to-date numbers, we have 42 IPOs, raising 5.8 billion ringgit with a total market cap of 27.5 billion ringgit, bringing fundraising and market capitalization already at last year's full-year levels within just 7.5 months. So this suggests that the market continues to be strong in this respect. Second, we have a deep pipeline of companies at different stages of growth, right? We have the lead market, the ace market, and the main market, all of them effectively creating a funding ladder, allowing companies to access public capital as they scale. And third, we have an ecosystem that supports companies beyond the listing itself, from advisors and intermediaries to institutional and retail investors. I think what is particularly encouraging is that the pipeline is also evolving with the economy. We are seeing interest from areas such as healthcare, semiconductors, technology, and advanced manufacturing, right? Sunway Healthcare is a good example. Its 2026 IPO at market cap of 16.7 billion ringgit was Malaysia's largest in almost a decade and attracted strong institutional and retail demand. We also had, listings like Skychip as well, where we are moving up the ladder, where we are going into the chip design, rather than the back end, advanced packaging and testing and assembly. So I think all of this is showing that we are evolving more, and we have interesting, exciting companies that are coming into the market. So I would say Malaysia's IPO story is no longer simply about how many companies we list, right? It is increasingly about what kind of companies we are bringing into the market and how they can use the market to fund their next stage of growth. I think the real test now is not how many companies come to market, but how many of them use the market to become bigger, stronger, and more valuable businesses.
Yeah, very solid point. I think that's a very good indication that Malaysia is actually attracting more and more larger and bigger companies to get listed. And of course, I do also, just now Stephanie also mentioned, not just a single sector, actually it's quite broad-based. So we also see some institutional grade blockbusters and also high growth sectors like advanced electronics, clean room automation, and healthcare. And also, how is Bursa Malaysia balancing the push for listing momentum actually to address their need to attract a more larger and more diversified, and of course, emphasize on the future economy companies to both our main and also ace market listings?
Yeah, I think for us, I wouldn't call it a trade-off. Yeah, it is not a trade-off. I think the objective is to make the market more representative of where Malaysia's economy is going. Right? Malaysia has a strong base of traditional sectors, but the economy itself is changing. Yeah? We are seeing opportunities in semiconductors, healthcare, technology, advanced manufacturing, energy transition, and the digital economy. So our focus now is on making sure the capital market can support these businesses when they are ready to scale. And that is why the funding ladder matters. Right? A company doesn't necessarily need to be large, matured company on day one, right? What matters is that there is a credible pathway for the companies to progress as they grow. The other important point is not every IPO has to be a blockbuster. Yeah? Different companies serve different purposes in the market. So what we want is actually a healthy mix of established businesses, growth companies, and future economy companies. So ultimately, I would measure success not just by IPO numbers, but by whether the listed market increasingly resembles the Malaysia of the future rather than the Malaysia of the past.
Good, very good point. I think that's very fair. I think not necessarily all IPO has to be blockbuster. There are some IPOs that a bit low at the beginning stage, but of course when they started listing, people discovered them more. Of course, they actually eventually they also deliver a very strong share price surge after the IPO as well. So next question, perhaps I would like to check with Stephanie as well. How do you see modern investment and of course more and more research platform has also revolutionized how retail capital inflows to the primary markets? Also, we are seeing some massive oversubscription numbers. I think we saw some IPOs got more than 200 times oversubscription rate. And so how Bursa Malaysia view the role of digital investment platform like us in broadening investor participation and also improve the accessibility of the information to all these IPOs and the potential newly listing companies as well. Yeah.
Yeah, you're right. So I think digital platforms have fundamentally changed the investor journey, right? But I think the next phase is about moving from access to informed participation, right? Access is no longer the biggest barrier. Investors today can open accounts, access market information, and trade digitally much more easily. Bursa itself, we ended 2025 with an all-time high of 2.5 million active CDS accounts, up 14% year-on-year, with 522,000 new accounts opened during the year. The momentum also has continued to 2026, right? So if you look at 2026 year to date, we have got already 391,000 new accounts open year to date. So platforms like Moomoo can play an important role because they are bring together distribution, information, research, and education all in the same investor journey. But there's an important responsibility, yeah, when it comes to greater accessibility. When information becomes abundant, the challenge becomes knowing which information to trust. Yeah? So I think we need to be very careful. And so this is where Bursa and our ecosystem partners have a role to play, right? Making credible company information, research, education, yeah, and market data easier to access. So I see platforms, of course, like Moomoo, not simply as trading channels. Yeah, I see Moomoo as distribution partners for the capital market. Yeah, I think the objective is not just to make it easier for somebody to buy a stock. It is to make it easier for someone to understand what they are buying and why they may want to hold it.
Great. Thanks for summing it up for us, Stephanie. I think it's very crucial. I mean, not just buying into a stock, but also understand what are you buying into. So actually, I think we have seen a very excitement during the IPO launch. I think a lot of engagement during the IPO period and the book building process part. I think corporate is very active, searching to talk to the investors. But of course, also on the exchange side, how do you see the platform, and together with the platform, how can we work together so that we can convert so-called the short-term IPO flipping? Because sometimes people buy IPO just like hoping day one they can just make the trade and make a profit. But of course, what we wanted to see also grow into the long-term relationship with the companies, so that that will bring up more broader and longer term of investment relationship with the company as well. So how does Bursa's views on this part as well? Yeah.
So I think when we view an IPO, an IPO should be the beginning of an investor relationship, not the end of the story. Yeah. There is naturally, as you said, a lot of excitement around an IPO, right? So the prospectus, the balloting, the listing day, the gong day, and the initial price movement, right? So, but I think the real value of public markets comes after the IPO, yeah? So for that to happen, three things I think need to work together, right? First, companies need to keep communicating, not just their quarterly numbers, but their strategy, their priorities, and their progress, yeah? Second, I think investors need access to information that helps them understand the business beyond the share price. And third, platforms and the exchange can help keep that information visible, right, and accessible after the listing. This is where initiatives in Bursa, we have this Bursa IR for You program and digital investor relations tools. Yeah, so this can help the company strengthen their engagement with investors. I think ultimately we want to move investors from asking, what will this stock do tomorrow? Yeah, to also asking, right, where will this company be in the next 3 to 5 years? And that is very much aligned with the philosophy behind our recently launched My Value Up program.
Thank you, Stephanie, for bringing up the My Value Up program, which was recently launched. Of course, I think during my presentation earlier, we also shared that despite our profitability has done very well in terms of Malaysia listed corporate, also our balance sheet strength is actually much more healthier. I think gearing ratio has been kept quite low, but quite noticeable also. A group of Malaysian public listed companies actually like on a long-term basis, actually trading at a valuation discount against our regional peers. So I think back to this, what's the core objective of our My Value Up program, and why you think it's the right time to launch it right now?
Yeah. So the core objective of the My Value Up is really to close the gap, yeah, between strong corporate fundamentals and the value that the market actually recognizes. So we, in Malaysia, we have companies with sound businesses, strong franchises, and good returns. But some continue to trade at discounts relative to their regional peers. So this is not about saying Malaysia as a whole has low valuation. In fact, we don't, right?
Yep.
And it's not that Malaysia deserves a blanket re-rating, right? The opportunity is actually company-specific, because within a specific sector, there could be two companies in a sector that actually trades at very different valuations, right? So there is a valuation dispersion within sectors. So this is where there's the company-specific, improvement that can happen. So we want companies to look at the fundamentals of value creation, right? So look at ROE and ROIC, look at capital allocation, balance sheets, portfolio structure, growth investment, and importantly, how clearly they communicate their strategy and progress to investors. So your question, why now? Why now? So number one, because the ecosystem is coming together, yeah? We have the Capital Market Master Plan, and that's providing the broader ambition for market growth. We are strengthening the supply side through better corporate disclosure and capital discipline. And increasingly, we also have the demand side support through institutional investors, greater research, and investor engagement. And investors today are looking beyond just the headline multiple. They want to know, what is management doing with my capital? What returns are they generating? Where is the growth coming from? And can I see a credible path to long-term value creation? So my value up is not about forcing a re-rating. Yeah? It is about creating the conditions for companies to earn a re-rating through better companies, better information, and better market access.
Great. I think the message is very clear. I think the central theme of this My Value Up program is actually to encourage the boardroom, not just a mere compliant basis, but to actively articulate their long-term growth and capital allocation strategies. And of course, now not just the big cap, mega caps, but of course, we're also seeing some matured mid caps that also trying to communicate their long-term value creation plans and of course their strategic direction to the investors. But of course, at the same time, they also have some of the fear of the market volatility. How does Bursa address on this thing?
Yeah, I think the mindset shift we are trying to encourage is from reporting what happened to explaining where the company is going. So I think My Value Up, we don't want it to just be a box-ticking exercise. Yeah? So we want it to demonstrate that long-term value creation. So compliance tells investors what happened last quarter. Yeah? But investors also want to understand, as I mentioned earlier, where is the company going, how will it grow, how will it allocate capital, and what are the priorities for shareholders. So that doesn't mean, companies need to give earnings forecasts or disclose commercially sensitive information, right? This needs to be cleared at the board level, right? But it means being clearer about the direction of travel, right? So for a mature mid-cap in particular, sometimes the issue isn't just that the business is weak. It is that the market doesn't fully understand the company's strategy or how the management intends to unlock the value. Yeah, we are seeing, obviously, if you look at the banking sector, they are looking at initiatives where they are reporting more disclosures. They are reporting increasing payouts, and increasing shareholder returns. So this is the kind of visibility that we want, and as shareholders would want to hear from the company. So I think if you look at the Value Up Guidebook, it gives companies a common framework to think about through these issues, right? And importantly, we are not asking companies to make any specific promises. We are asking them to articulate what is your priority. Yeah. So what is your strategic priority? Where are the capital allocation principles? What are the value creation areas? And how will management communicate the progress? So the program is voluntary, but highly encouraged. With 2026 focus on familiarization and alignment, yeah? And the targeted companies are expected to begin publishing their My Value Up plans from 2027 onwards. So the objective is really to create better conversations between board, management, and investors.
Great. I think that's very clear. I think the whole program, I think the message is to encourage stronger value creation through communication. And of course, at the Malaysia-wise, we see capital market continue to grow. And the most important is actually the trust in attracting all the long-term investment. So beyond fiscal performance, actually what gives investors confidence in a company throughout a long term in the market?
Yeah. So, I mean, of course, if you look at it, financial performance, it will start to get the investors interested, right? But how do you keep them invested in a company in the long term? And this is trust, yeah? And trust is built over time. So investors want to know that the management is credible, that the capital is being allocated sensibly, that governance is strong, and that the company will communicate consistently, including when things don't go according to plan. So that is why investor relations is becoming much more strategic. So good IR isn't simply about putting out announcements. It's about helping investors understand the business, the strategy, and the decisions management is making. And Bursa, we are supporting this through initiatives like the IR for You. We've got this program called the Bursa Rise Plus. So that's a research incentive scheme where we incentivize research houses to write research on under-researched companies. Digital IR through the My Bursa business module and the Bursa Malaysia IR Awards that we will be having quite soon. So this is to incentivize and to get the companies that are performing very well to be recognized more in the market. So and I think this matters more today, because investors have so many choices. Capital can move across markets very quickly. So transparency and consistency becomes competitive advantages. So the companies can build investor conviction through both performance and communication. And this is likely more to attract capital, right? Patient capital. And that is really the conviction between investor trust and the My Value Up program.
Great. I think that echoes well, I think, with the whole program. I think it's not just a single My Value Up program, but throughout the other programs that also help to create the trust among the investors as well. As investors have become more informed and their financial goals has been more diverse, they're also looking for beyond traditional equities for growth, income and diversification and wealth preservation. So how is Bursa Malaysia working with industry partners to expand the investment ecosystem, so also provide investors with a more broader range of opportunities throughout their investment journey?
A modern capital market needs to meet investors where they are. And investors don't all have the same objectives. Some investors are looking for growth, some want income, some want diversification. Others are looking for ways to manage that risk, right? So our role is not simply to create more products, it is to create more meaningful ways for investors to participate in our market. So that means lowering the barriers to entry, expanding access to different asset classes, and giving investors tools to manage their portfolios, right? For example, we have the Bursa Gold Dinner, which allows participation from as little as 10 ringgit. So this is like fractional gold, While we also have BR Capital, which opens access to private market fundraising from as low as 100 ringgit. We also have products such as the Mini FKLI, right, or Mini FKLM that can help investors think about portfolio hedging and risk management. And increasingly, we are also looking at regional and thematic opportunities. So the bigger picture here is we are trying to move from a market where investors simply buy and sell shares to an ecosystem where they can actually build and manage a portfolio. That is ultimately what encourages people to stay invested in the longer term.
All right, finally, I think the final question for today also, I think looking ahead on this capital market master plan target, we hope to see our overall capital market size to grow from 4.3 trillion to between 5.8 trillion and 6.3 trillion by 2030. So, Stephanie, on your view, what would success look like for IPOs, listed companies, investor, and for a broader market ecosystem?
Okay. I think for me, success in 2030 is not simply having a bigger market. It is actually having a better market. The Capital Market Master Plan, as you mentioned earlier, they have set an ambitious objective, right, to grow the capital market from 4.3 trillion ringgit to 5.8 to 6.3 trillion by 2030. So market size is ultimately an outcome. But for me, I think for the companies, success means we have a stronger pipeline of businesses from sectors that will drive Malaysia's next phase of economic growth, more future economy sectors. So for listed companies, it means stronger value creation, better capital allocation, and greater investor recognition. For investors, to me, it means more choices, right, for investors, better information, and greater confidence to invest for the long term. And for the ecosystem, it means these things actually reinforce each other. When you have better companies, more good companies, that also means that there's more choices, more investment opportunities. With more investment opportunities, it creates deeper liquidity in the market. With deeper liquidity, you get stronger investor participation, whether it's foreign or whether it's local. And with that, more companies want to raise capital in Malaysia. So this creates a virtuous cycle that can help the capital market. So if you ask me what I would like Malaysia's capital market to look like in 2030, It's not simply that a market that is bigger, but it is a market where companies want to list here. Companies choose to list here. Yeah? Investors want to invest here. Investors want to invest in the Malaysia capital market. And global capital wants to stay here. Yeah? So that's what I would call a successful My Value Up journey.
Thank you. Thanks, Stephanie. Thank you.
Imagine if every person who downloaded Moomoo in Malaysia started stacking their phones. Here we go. It looks like it outtowers our tallest tower, surpassing our highest peak. We've crossed 2 million downloads, and every download pushes us to reach for the stars. To bring you only the smartest trading experience with global market access. Moomoo, download now.
Thank you, Stephanie, for sharing very valuable insights just now through the Fireside Chat. Before today's session, actually, we also gathered some of the questions from our community posts. So thank you for submitting the question. I think myself and Stephanie also try our best to answer some of your questions as well. So can we move on to the question number 1 that we have selected? All right, yeah, thanks for a question from our users. Why BNM maintain GDP targets, although a strong GDP performance for the first half of the year? Oh, very good question. I think GDP, I think the official second Q GDP actually just came in last week. Yeah, actually it came in at 6% for second Q, and first Q it was 5.4%. Actually beat a lot of economists' expectation. Yeah, you are right. Actually, the governor actually maintained the GDP target for 2026 at 4 to 5% range, rather than upgrading their target for this year. I think largely that was due to the more prudent approach by the governor himself. Of course, he also do explain that our economy is actually not overheated, and the outperformance is actually partly because of the very strong E&E exports numbers growth, which exceeded expectation as well, and also partly because of the crude oil price movements, that led to the higher value of our Malaysia crude oil export. But of course, he also shared that because of this political noise surrounding the world, external shocks may happen if US and Iran tensions prolong. And of course, if ceasefire happen, then crude oil price may come back down again. That may create another factors that are very hard to predict. And E&E wise, we all know that very much depend on the intention or the willingness of the FDIs coming in, which is pretty much uncontrollable by the Bank Negara governor. So another thing that I think, rather than just make a judgment that are we seeing a softer second half of Malaysia GDP growth, I think a few indicators that we can take a look at, of course, is the monthly import and export numbers. Until the June figures, we're still seeing a very strong export growth trend so far. So unless it has turned showing a consecutive month of declining, then we may see a weaker second half of the year. But of course, caveat-wise, everything being hunky-dory, nothing big shocks to the market, and no more tariff impacts, I think that may seeing Malaysia actually achieve better growth in our second half, and of course exceeded the target by the Bank Negara governors 4 to 5%. All right, thank you for your question. Shall we move on to the second question that we have chosen? All right, great. Thanks. Oh, good one. This one, I think, very relevant questions to our today's topic. How should I judge whether an IPO will actually be successful in the long term, and it's just not a short-term hype? Can I let Stephanie take on this question?
Okay. I wish I had a crystal ball. Yeah. Okay. But I think like we discussed earlier, an IPO's first day performance, of course, they will create excitement. Yeah. But again, as I mentioned earlier also, the long-term success depends on actually what happens after the listing, right? So as an investor, I think, you need to ask, a few questions. I mean, maybe give you 3 examples could be, okay, look at the company, right? Is the company delivering on the promises that is made during its IPO, yeah? Is management communicating openly and consistently with investors? Look at the business model as well, do you expect the business to become stronger over time? Do you expect to get more returns over time? I think ultimately, rather than focusing on where the share price will be tomorrow, I think focus as well on whether the company is likely to create value, over the next 3 to 5 years, I think that's often a better measure of the long-term IPO success.
Yeah, thanks, Stephanie. I think that's very good three areas that we should be looking at the IPOs. Yeah, because IPOs sometimes, short term can be very overhyped because they are at the right moment, at the right trend. But long-term wise, also management qualities, how they can drive the company, even though in a much more difficult kind of environment. I think this is another areas that we can look at as well. All right, thank you. Thanks for your questions. And now we move on to the more exciting part. Yeah, I think this is a more, sorry for keep you guys waiting. We are coming to our lucky draw session again. This is our finale lucky draw. So we are giving out 3 lucky winners to getting an iPhone 17. And it's a 256 gigabyte phone. So the winner will be selected according to our terms and conditions, and of course have been contacted by our team after verification. So without further ado, let's begin the draw. Wow, very nice. I think, yeah, this one, congrats to all our grand prize winners, and thank you everyone who have participated. So our official winner list will be announced in our Moomoo community, and our team will be contacting you, all the winners, shortly for your prize collection. All right, okay, thank you. And of course, yeah, very thanks for those that stay tuned until the end of our live stream. Here almost come to the end after our finale lucky draw. Our 2 million campaign celebration, thank you for you. And of course, thank you, Stephanie, being part of this event, and of course sharing your valuable insight with us. We also thank you every Moomoo users. Without you, I think we are unable to achieve this milestone. And of course, I think our journey continues. And of course, we have another live stream in September again. We'll be putting a more greater focus on US markets. I believe you all a lot also not just invest in Malaysia and also in US and global market as well. And again, big thank you for watching, and we look forward to seeing you again soon. Thank you. Good night, everyone. Thank you.
Thank you everyone. Good night. Thank you.
Imagine if every person who downloaded Moomoo in Malaysia started stacking their phones. Here we go. It looks like it outtowers our tallest tower, surpassing our highest peak. We've crossed 2 million downloads, and every download pushes us to reach for the stars. To bring you only the smartest trading experience with global market access. Moomoo, download now.
Moomoo Desktop, the next-gen trading platform, launches with a focus on simplicity, allowing traders to concentrate on trading. The platform lets users customize their workspace with real-time data and interactive charts, while advanced charting tools enhance technical analysis by allowing trend lines and key levels to be marked for more precise decisions. With the options